Hello and welcome. My name is Brandon Manley. If you're watching this video, someone in my organization has probably sent it to you. So I appreciate you joining us. My goal here is very simple. It's just to show you what we do, how we do it, how we make money, our system as a whole. So that's my goal for today. Myself, I got started with the business about 4 years ago in 2019. And I'll tell you, I came from corporate America. I was working a good job, climbing the ladder, got to a management position. And for me, I finally saw that glass ceiling. So if you're like that out there and you're in a successful role and you're doing well, but you want more, this may be for you, okay? So my goal is just to show you what we do. And maybe it makes sense to you, because I know for me, it made a lot of sense. When I saw this opportunity, I saw something I had never seen before. It was one of those opportunities where the sky is the limit for you. So you get to choose how well you perform in this position. And I love that about this. I can't think of another industry that offers you what the life insurance industry offers you. The entire financial services industry offers you. You can look at solar, you can look at pest control, you can look at real estate, you can look at Airbnbs. But I don't think that you have the immediate opportunity to jump into those and be successful like you do in the financial services world. So anyhow, we're going to break it down to you, show you how. I'm going to try to be short and concise with it so that you get a good understanding of it, and I keep your focus. All right. So this is my group. It is called the Alliance Millionaire Group. I am part of a bigger organization called the Alliance. So what we do is we work with insurance carriers. So we are an insurance marketing organization. Right, so we're not an insurance company. We market and sell the products that the insurance companies offer. So we find clients, we offer them the products that the carriers offer, and we just connect the dots for the client. So just to break that down a little bit more, these are the carriers that we represent. So this is not all of the carriers, but this is certainly a few that you may recognize. So here at the top, you have Mutual of Omaha, Transamerica, CVS Health. Everybody knows who CVS is, right? Your local pharmacy. They actually have a product line that we offer. We have F&G, Fidelity and Guarantee, AIG, Humana, Cigna, and we got 40 more carriers, okay? So these guys are really good at creating the products, right? These are billion-dollar companies. When you think about an insurance carrier, just know like a lot of the banks are taking their money and investing it into insurance products that grow. Right? So these companies have a lot of money and they're really good at creating the products, right? So it's kind of like one of those things. Well, what do they need you guys for? Well, let them stick to what they're good at. Let us stick to what we're good at. They're great at creating these products. They're not as great at getting into the hands of the people that are looking for it, okay? So this is a list of our clients, and I'm going to explain these, so don't worry about the acronyms. But our clients, people that are looking for insurance, okay? So one of the biggest markets that we work in is the final expense market. So think about all these as verticals in our business. So the first vertical we're going to talk about is the final expense market. Final expense is exactly what it sounds like. It's burial insurance, you'll hear it called that, but it's used for final expenses. So there's many people out there looking to make sure that when they pass away, that their family is not left with a burden. And so when they're looking, they reach out to us and they say, hey, we're looking to get some coverage there, right? And it is to cover the final expenses. Now, this is a massive market, right? So just to give you some context on that, the final expense market, and I put ages 50 to 85 here, that's generally our target audience. So the final expense market, if you didn't know this, 10,000 people are turning 65 years old a day. And that's going to go for the next 13 years. This is what we call the baby boomer generation, right? So right now there's an estimated $24 trillion being transferred in assets from the baby boomer generation to the next generation. I'll get into more of that here in a minute. But this is going to happen for the next 13 years. We're going to have 10,000 people turning 65 years old a day, right? So that's just an unbelievable market. It's a very lucrative market. And there's additional things that you can do with this market too, which I'm going to talk about. So the next one that I'm going to talk about is mortgage protection, right? So mortgage protection works like this. If I'm married, right? I'm married to my beautiful wife, Haley. If I am to buy a house, let's say I go and buy a $300,000 house. Well, it crosses my mind that, hey, if I'm not here any longer, is my wife going to be able to stay in that house? And this crosses a lot of people's minds when they have babies, when they get married, right? And then they buy a house. So let's say I go out and I buy a house for $300,000. Well, if something happens to me, let's say I'm the main breadwinner. Actually, it doesn't even matter if I'm the main breadwinner. Let's say that we're 50-50, okay? So if something happens to me, my wife's income is immediately going to be cut in half. So does she have the money to afford the house on her own, right? So if that is a concern of mine, I may want to get something in place to make sure she can take that money and either pay off the house, sell the house, maybe downsize. This money's not tied to the house, right? It's tied to the person. So if something happens to me, that $300,000, let's say I get a insurance policy for $300,000 to cover the $300,000 mortgage. My wife gets a $300,000 policy to cover the $300,000 mortgage. That money will get left behind, so that the bank doesn't come and take the house that we've been working on, that we have equity in, because you know how those banks are. They will take the house from you. So that's what mortgage protection is. Ages are going to vary with this, but that's as simple as it is. Now, Medicare Advantage and Medicare Supplement, you may or may not have heard of that. Just to give a really quick understanding of what that is, when you are 65 years old, right, you have access to a government subsidized health insurance program, and that is called Medicare Advantage. So it happens when you're 65 or if you become disabled, right? So you have access to this Medicare Advantage program. Now, when you can add on Medicare Supplement to these, right? And this is crazy because the Medicare Advantage, it is a zero cost premium from the client to cover this Medicare, right? So Medicare Advantage works, it's a $0 premium. Now, when you start talking about supplements, that's adding in things, right? Adding in special doctors, different things like that, right? Multiple visits to the dentist or whatever the case may be. This is supplements. It's kind of like, think about it this way. If you go to a car dealership and you get the base model of the car, it's not going to have all the bells and whistles, and it's not going to be as expensive. That would be the Medicare Advantage. When you start adding on supplements, that would be like all the bells and whistles on the car. So that costs more money. So the supplements do cost the client money, but you're getting them something at a zero cost premium and then adding on supplements to that. And here's the thing, they have to get it when they turn 65 years old, right? They have to sign up for this program at 65 years old. And remember, I just told you, 10,000 people a day are turning 65 years old, okay? So it's a massive market there as well. A couple other things that we do. Ancillary products, right? Ancillary products would be cancer, heart attack, and stroke plans. So I'm going to put a little star next to this one because I think these are more like add-on products, right? So if I help somebody out with a final expense program, I'm going to have to ask them some health questions. Some of those questions are going to be around cancer, heart attack, and stroke. And so what I may ask the client is, hey, do any of those things run in your family? And if their answer is yes, they may see the value in a cancer, heart attack, or stroke policy. It's a smaller premium, they pay for it, and they get a tax-free check, right? All of these things that I'm talking about, by the way, all of these are tax-free. Insurance is one of the only non-taxable things that you can own, right? So when you get a final expense check, 100% tax-free. Mortgage protection, 100% tax-free. Same thing with these. If you get diagnosed with cancer, heart attack, or stroke, no matter how mild, no matter how severe, you're going to get cut a check from the insurance company to help with medical bills, to help with being out of work, to help with the mortgage. Whatever that may be, you get to choose how you spend it, but they give you a check. We also have accidental, which is pretty straightforward. These policies are very cheap, big face amounts on them, big death benefits, I should say, on these. So the only thing is with these is you only get paid out if you pass away from an accident. Now here's the thing, from ages 0 to 44, the leading cause of death is accident. So why would somebody not have this policy on themselves, right? It's cheap, it's a big face amount if they pass away, which is the most likely way they would pass away from ages 0 to 44, all the way up to 65. This is still the number 3 leading cause of death. It's behind cancer and heart conditions, right? So very easy policy to add on there. And then we also offer hospital indemnity. Hospital indemnity, if you go, just quick explanation on that, if you go to the hospital and you have a hospital indemnity plan, they basically pay you for every day that you're at the hospital. And that's going to range from, let's say, $100 to $700 that you'll get paid out every day. And what's that to cover? That's to help cover the medical expenses, that help to cover your bills out of work, right? Those sort of things is what this covers. Again, these are very cheap add-on products that people have most likely had some sort of experience with it. So this is very critical to them. One of the biggest things, right, if you've ever, maybe you're coming and you've been in the insurance world, maybe not, but one of the biggest cheat codes that I think we have is we own a registered investment advisory. That investment registry is called Integrity Advisory Solutions. So what Andy did, Andy Albright, he's the owner of the company. He decided, hey, I'm going to start a registered investment advisory. We're going to hire some financial representatives, financial advisors, and they're going to help our agents, right? So think about it this way. They can take money and they can manage it for our clients. And there's a lot of firms out there, I won't say any names, but they're charging you more than what they're actually telling you. These guys are smart enough to go through their statements and look and say, hey, did you know you're paying X amount? Right? So that's what they do. And they also help us out with annuities. Annuities I can't get into right now in detail, but fixed and fixed index annuities is all that we offer. But typically when people get older in age, they're looking for a safe investment opportunity, right? So when you think about an annuity, the only thing it is it's a savings account with a return from an insurance company. So it has a higher return than most things out there, and it's a safe play. These people can't lose money. When they're in retirement age, like somebody my age, they're not looking at an annuity. Why would I, right? I've got time to bounce back from the market. But people that are getting up there near retirement, they don't have time to bounce back, so they're looking for safe vehicles. All right, and then moving on here is the IUL, right? So we do a lot with Index Universal Life. There's a lot of buzz around Index Universal Life, whole life, a lot of buzz around that. And you'll see this term often. This is not bring your own beer, this is be your own banker. All right, so that concept, look it up if you're not familiar with it. But IULs are used to become your own banker. They're used for college funds, and they're used for tax-free retirement. That's what they're used for. A lot of people are really finding out about these, I feel like, more recently, and they're starting to jump on the bandwagon, and they want these products. Now, they got to be healthier, they got to have some money put towards it, but they're incredible products. Now, the HMA, that is a medical program. So best way I can think to explain that to you is a HMA is a HSA that just has more available to it, right? So an HSA, you can go to the doctor, you have an account, you swipe your card. An HMA is the same way, except for you can use it for a lot more things. Right? A lot more cosmetic things, right? So if you know any cosmetic doctors, right, they would love to have a product like this in their client's hands so that they can do more work, make more money, all right? So that's HMAs. You can look that up. Health matching accounts is what it's called. So the biggest thing is how do we find these clients, right? So we do it through leads, all right? Now, these leads come in different forms. We have direct mail and we have internet. And just to give you an example, this is what a direct mail lead looks like. So we send out these little postcards. We send out about 1 million a week. We only get about a 1% return, but you do the math on that. That's an insane amount of these postcards coming back. So somebody gets this in the mail, right? They fill it out, they put all their information, and they put it in the mail and send it back to us, right? That's a direct mail lead. So this lady, Sandra, as you can see, and it's no bait and switch, it says, life insurance and final expenses. So this is a final expense lead. This is one of these guys. So this lady has filled this out and she sent it back to us, and she's requested for somebody to reach out to her because she's interested in the life insurance programs to cover her final expenses. So these are very intent leads. We're not cold calling, we're not calling through a yellow page, nothing like that. We're calling people who are reaching out to us, okay? Internet leads, they're very similar. They look like any form that you've seen online, right? I don't have one of those to show you, but we produce these direct mail leads, and these folks are looking, and we target people, okay? So we're doing target marketing with this. So when people have major life events, and there is a ton of major life events that I could go through, but just for sake of time, when somebody gets married, when they buy a house, when they have a baby, when they turn 55, or when they turn 65, right? These people are having major life events, right? So for us, what we found out is these people are most likely looking for their products when they have these major life events. So what we do is we target these people through leads. And this is all court data. So we buy the court data and we market to these people. And we take their products, so the carrier's products, we find the clients and we match them up. So they fill this form out. So think about it like this. They fill this form out. Client fills the form out. We go to the client. We match them with a carrier. And I always say we bridge this gap. So this is where the alliance comes into play. So we just bridge the gap for them. We're their sales force. We're the people on the grounds. We got a system around this. We know how to do it. We can teach you how to do it. It's a very simple process here. So hopefully this makes sense to you. I'm going to move on just a little bit because I'm sure you're curious at this point. Hey, Brandon, how are you making money, right? So let me explain that to you. All right, so if we are sitting down, let's go back to this lead. So Miss Sandra filled this out. So let's say that this is you, and this is Sandra. So Miss Sandra, obviously she's filled out something saying that she's concerned that maybe she doesn't have enough coverage, maybe she doesn't have anything at all, she lost it when she left her work, whatever the case may be. Miss Sandra and her spouse, David, filled this out. They're 74 years old, okay? So Sandra, she fills it out. We visit Sandra. We set up a meeting with Sandra, and we sit down with Sandra, and we find out, let's say she wants a $20,000 policy. And maybe David does too, but let's stick with Sandra for now. So Sandra wants a $20,000 death benefit when she passes away, tax-free, to leave her family to cover her final expenses. Now, let's say that this is going to cost her $100 a month. So what we need to do is we need to pair her up with one of the 40 companies that we offer. So let's just say that we pair her up with AMG, okay? So what we do is we fill out the electronic application. I was going to say paperwork, but it's all electronic now. We fill out the electronic application. We send it off to AIG. A lot of times we're getting instant decisions right there. If not, it usually takes about 24 to 48 hours. There's something in their medical background that they want to look into a little bit further. But we've got a great idea of which company to go with after we ask them questions. So we send off an application with Sandra's bank account information to say, hey, she can pay for this. So we send off her $100 essentially. They send Sandra back a policy in the mail, and they pay us to the tunes of $500 to $1,000 every time that we set someone up. So let me break that down too, because you're like, hey, Brandon, how'd you get to this 500 number? Great question. So so these insurance companies, if Miss Sandra is paying $100 a month, right? So the insurance companies are paying us based off of annualized premium. So our commission scale goes like this. It goes from a 55% up to 140%. It goes up in increments of 5, but I don't have time to explain our whole commission grid, but we can get you that information. But let's just say you're down here at the bottom contract. You're at a 55% commission. So if she's paying $100 a month and the insurance company pays you based on, that's the monthly premium. If they pay you based off the annualized premium, we just multiply this by 12. And that gives you $1,200. You'll hear us say AP, annualized premium. And this is what we get paid based off of. So again, if you're at a 55% commission, you're going to make $660. Now, the insurance companies are going to pay you in advance. They're going to pay you right away. By the way, we pay Monday, Wednesday, and Friday. So if today is Monday and we submit a policy today, it gets approved today, we're going to get paid on it on Wednesday. If we get approved on Thursday, we're getting paid on Friday. But we get paid 3 times a week, which is unheard of, right? So the insurance company, they're going to advance us 75% of this right away. So think of it like this. This is for months 1 through 9 is what they're going to pay you. So immediately what you're going to get deposited into your bank account is $500. You're getting $500 right off the bat. All right, now you're like, hey, but Brandon, there's a discrepancy. There's $160 that the insurance company owes me. Correct. In months 10, 11, and 12, you're going to get the remaining $160. Let's do $150 for math purposes. So you'll get an extra $50 in month 10, $50 in month 11, and $50 in month 12. Now, here's the crazy part. This isn't even where the money stops, because most of our products have renewals associated with them. So you're getting around a 5% renewal every year that this policy's in force. that the client has the policy based off of this. So you're making money every year after you sell this product. That's called a renewal, okay? So let's say that you're doing this thing, like what's the income opportunity? Well, we've got a wide array, right? But let's say that you're doing this part-time. If you go out and help 4 families, right? So in a week, you go out and help 4 families, you're making $2,000 into your bank account. Now, on the back end, instead of making 50, you're making 200 in month 10, 11, and 12. And this is a very conservative approach, right? 4 applications in a week, very doable, very easy. You know, we got a lot of people submitting 10 to 20 apps a week. Some even doing, you know, 10 to 20 a day. But let's just be conservative with it, all right? So that's kind of how the money side of this business works from a sales perspective. So I want to give you guys a glimpse of another way that we make money. So in the insurance world, these insurance companies, remember, I told you, they want more people selling their products, right? Because they take that money, they take all the premiums that they have coming in, and they invest that money, right? So the insurance companies are smart. So you can look at that last page. I like using this example. Robert Kiyosaki, he talks about his 4 quadrants. He talks about the employee, the self-employed, he talks about the business owner, and he talks about the investor. And the way he explains it is employee, you're trading time equals money. For when you're self-employed, you equal money. When you're a business owner, people make you money. And when you're an investor, money equals more money, okay? So pretty simple. If you haven't seen that before, check it out. He's got a bunch of videos out there about it, but it's a great way of looking at this business. So the page I just showed you, we call that personal production. That's your self-employment side. So you dictate how much you make, right? The great thing I like about this is you can simultaneously build a business with this. And I'm going to show you how this works. But you can really do both of these things at one time, right? So you can go out there, you can get your personal production, and you can also teach other people how to do this. So let's say this is you. And I'm going to draw out an org chart. So let's say this is John. Let's say this is Grace. And let's say this is Brad. Okay? So you've got 3 people in your organization. So let's say at this point you've worked yourself up to 100% commission. Woohoo! All right, you're at 100% commission. So let's say you go out and you write, the average policy is about $1,000 annualized premium. So let's say you go out and you write 10, and let's talk from a month perspective here. Let's say that you go out and you write 10 policies. So that would be 10,000 annualized premium, because 10 times 1,000, 10,000 annualized premium. You're at 100% commission now, so multiply that. You're still at 10,000, right? But remember, I told you, you're only going to get a 75% advance. So you're really going to make $7,500 in this month, right? $7,500 in personal production this month. Now, let's say that John, he's at a 90% contract. He's worked himself up to a 90. Let's say, well, let's do it this way. Let's say 90%. Let's say 80% Grace has worked up to, and Brad's at a 70%. So let's say, just for sake of numbers, that they're all doing 10 policies too. So they do 10,000, they do 10,000, and they do 10,000. All right? So the way that this works, again, the insurance company wants you to get other people to market their products because they make more money. So they're going to reward you for this. Think about this like a referral bonus in a typical job, except you get paid on it multiple times. So what they're going to do is they're going to pay you the difference between you and that person. So there's a 10% difference here. She did 10,000, so 10,000 times 10% equals $1,000. Grace, you got a bigger difference between your commission level and hers. It's 20%, so 10,000 times 20%, you're going to make $2,000 in residual income. And Brad, you've got a 30% difference. So you're going to make a 30% on 10K, $3,000. So if you look at it like this, right? Right here, you're making $6,000 in residual income. Work that other people have gone out and done. Since you brought them into the business, you get rewarded. Now let's add in your $7,500. Now you're up to $13,500 in 1 month. And if you calculate it, this is 10, 20, 30, 40, this is a $40,000 organization. That is incredible, but I will tell you, that is a very small amount in the insurance world. You can grow your business to massive amounts. You could be doing 10 million a month. It doesn't matter. And you have no limit on when you can start building your team. You have no limit on how big your team can actually be. So from that perspective, I mean, this is just an unbelievable opportunity when you think about, hey, I could do sales. Yeah, this can be an incredible sales job, right? I showed you how that broke down. It can be an incredible sales job. But here's the thing, is if you could build a business out of this, that's where you can make millions in the insurance world, right? You can make millions in the sales side, but it's easier to do it this way. And when you think about financial freedom, I think about it like this. I think this is how you build financial freedom, in my opinion, because this isn't dependent on everything that I do, which I like, right? I like having other people that I can depend on. If I have a bad month or a bad week, they can pick me up, right? And I've got to help them, but there's a lot to this. This is an incredible business to do something like that. All right, so let's talk about what we do as far as training. Hey, this sounds great. How do I get started? Are you guys going to train me? Yes, we do a lot of training. So training looks like this. We have an entire university online, but we are not those people that just say, hey, go watch a video. No, we do a lot of hands-on training. So we do a lot of things. We do a lot of boot camps throughout the United States where you can go and get training. Most teams have team calls going over different stuff. We go over sales things all the time. So these are avenues, and we have specialists in different departments. So we have the annuity specialist, we have IUL specialists, final expense specialists. So we have people to help you out, okay? Now, we also do conventions. And this is like, think about it this way, is these trainings are incredible. They're great. They're great trainings. They get you up to speed, right? But these conventions are like 3 days long, where we have all the top producers in their field, whatever their topic is, they're the top producer in that field. So we have them talk. So this is basically an immersion into that training, a 3-day immersion. I always tell people, if you come to a convention and somebody else doesn't come to that convention, you can go ahead and put yourself about 6 months ahead of them, okay? Because you're going to learn so much from the top people. It's crazy to me, when I came from a sales organization, like, these people want to tell you their secrets. So we do 4 a year. We do national convention at the beginning of the year. We do a view from the edge in April typically. We do family reunion in July. And then we do a breakthrough typically in September moving into October. So we do 4 major events a year, and these are awesome, right? Now, I ain't even told you the good part, right? I should have left some room here. But we also do incentive trips. So every year, not only do you get to keep the money that you made, you get rewarded by an all-expense-paid trip. Now, I was a part of an organization before in corporate world where they took us places. They took us to, like, the Bahamas, right? And we didn't stay in Ritz-Carltons. We didn't stay in these nice hotels. Here, we stay in the nice hotels. Everything's paid for. Matter of fact, they give you cash for spending money when you go. As long as you get to the airport, it's completely taken care of. This year, we just got back from we just got back from Ireland. This year, we've got a 7-day cruise around Alaska. And next year, who knows where we're going to be going. But I'm excited for it. So we do these incentive trips. And if you want to know how those work, do you still have time, blah, 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 right? Yes, you do still have time. So moving on here. Now, all this sounds great. I will tell you, there's one catch to this. You do have to get a license. You have to get an insurance license. So you have to get a life insurance license. Now, it's a very simple process. If you're interested by this point, I'd recommend you reach out to the person. But it's very simple. You take an online course. It takes about 3 days to finish. You take a state exam, and you're licensed. And then you can go and do this. So, look, I want to keep this as short as possible because I just want to introduce the idea to you. And I hope you've enjoyed what you heard. I hope you see the opportunity that I saw when I saw it. Like it just blew my mind. I really truly believe at my core that I have the best opportunity to show someone. So I'm glad I got to show it to you today, and I appreciate you being here with us. We'll talk to you soon.